What is going on, everybody? Ziv here, Finance After 40. I'm going over my top 3 stocks to buy in March 2021. First, let's get started with, of course, if you know me, Walmart. Walmart almost at amazing price, 127. Let's go over the chart and show you why I think this is super cheap compared to Target and Costco. You guys that follow me know that I like to do comparison chart. I don't just think that Walmart is cheap. I need to know that it is cheap compared to the competition. If you see here, Walmart is here, the chart, the green and red. This is Walmart, okay? Purple is Costco, okay? We are right here. This is the daily chart. This is Walmart, this is Costco, and this is all the way up here, Target, even with the drop from 200 to like 170 something as of today. Basically 176. Even then, Target is super overvalued compared to Walmart and Costco. And I did an update video about Walmart about a week ago when it was 130. And I said that once they pass Costco to the downside and become the cheapest between them all, which will be around the price of 122 to 125, we're almost there. We're at 127. $5 more down, which is about 3% from here. Walmart will go down another 2-3%, another $3 to $5 from here. Hopefully we will get the perfect entry long term to buy and hold Walmart forever. But either way, anything below 130 is a steal in my opinion. That's stock number 1 to buy. Let's go to my second pick of the month, but I'm super bullish on Walmart long term, so let's move on. Second pick of the month, you can guess by the picture. Like, and feel free to like this video as well, is of course Facebook. I'm gonna show you exactly why it is super cheap compared to the competition, which is Twitter, in my opinion, #1 competition. Let me show you what I mean by that. Let's keep going. Comparison chart. Start using comparison. This is what the professional people in Wall Street are using. They're not using technical charts. They're not using Fibonacci and all that stuff. They just don't. They compare one stock to the other in the same industry that has highly correlated value, not for the same price, but for the same industry, the same thing. So I picked Facebook and Twitter. So let me show you what I mean by that. This is Facebook, the green and the red, daily chart. Facebook was always above Twitter until it hit here, $300, $304. And you see here, I pointed here, this is a 2 standard deviation tool, okay? I like to use this indicator. It shows me it needs to trade the correlation between 2 exact companies, not exact, but 2 correlated, highly correlated companies, needs to be between plus 2% standard deviation to negative minus 2% standard deviation. And you see here, when it broke $300, Facebook was overvalued more than 2 standard deviation compared to Twitter, and then it went down from $300 to around, what was this price here, 255, and basically just traded sideways for a couple of months or the same 255. And then this happened just in the last 2 weeks. Twitter, you see here, it's correlated, it needs to trade the same, and Twitter posted earning, and they went from a price of 51 right here to about $75 right here. And what I circle here is this one, guys, very important. Now Facebook is 2 standard deviation negative, meaning they're 2 standard deviation cheaper compared to the relative trade of Twitter, which is exactly here, meaning that this level, the 250 level, where Facebook right now, 255, 256, is extremely undervalued, more than 2 standard deviation to the negative side compared to Twitter, which is all the way here to be in the middle, and assuming 255 is a good entry point, at least long term. With all the problems that Facebook is having, I don't see them going, I don't know, a lot more below 250. I just don't see it, especially now that I got the sign that Facebook is 2 standard deviation to the negative compared to Twitter. So this is my second pick for March. Let's move on to my third and final pick for top stocks to buy in March 2021. Let's go. My third pick of the month is Alibaba, ticker symbol BABA. Current price is 236. With everything that's going on with China's regulation and the end IPO, and Jack Ma is not the richest man in China, all that stuff just goes to show you that, in my opinion, I'm gonna show you the comparison. It has nothing to do with my opinion, but Alibaba compared to the competition, which is, in my opinion, JD.com. It's not Facebook. A lot of people like to compare Alibaba to Facebook. I like to compare Alibaba to JD. Let me show you the comparison chart just so you can see how super undervalued Alibaba stock is. This is the chart. Alibaba is the green and the red, okay, and this is JD, super expensive compare to Alibaba. And what I mean by that, if you look here, let me put this as well. If you look here, a couple of like 2-3 months ago, we got the circle. Why I got this circle right here? Because Alibaba got extremely cheap, more than 2 standard deviation cheaper than JD. It needs to trade between the line, the +2 and the -2 standard deviation. And the price of this bar, the daily chart, let's see, the price 229, 228, low was 211. So if you cut this down to 11, you're very happy, because ever since then, even with all the down days in the last week in the market, we are still above the 211. We're at 235, 236 close today, but we got another super cheap signal in the last couple of days that Alibaba is super cheap still, over 2% standard deviation cheaper than JD. And it did go back to like between the lines, but it's still like 2003, something like that, 199, 198. And we got a little green candle right here. It actually closed green. I see 0.79% positive today. So the market knows, the professionals know how to trade. They are looking for those trades every single day. In my opinion, Alibaba at 236 is super cheap. If you didn't buy Alibaba about 2 months ago and it was 211, 215, 220, you got another shot today at 235. It is cheap compared to its direct competition in the industry, which is the JD.com, at least according to my opinion. Basically, bring you guys any sort of value, subscribe to my channel. I like for this month Walmart, Facebook, and Alibaba. Start using comparison tools, start using standard deviation tool. Go a little less on all the technical stuff that everyone are teaching you on YouTube, and start going away from the crowd and do actually what the professionals people are doing, which is using comparison charts and standard deviation statistics and numbers. They don't lie, people do. Remember that. With that being said, if you like my content, subscribe. Thank you guys, and I will see you in the next video. Yep.